As promised, Rahim Allani, Managing Director of OCI Groups, back with us once again.
Morning.
Great to see you. Welcome back. We're going to jump into a few cannabis names. There's been all kinds. We've been discussing this over the past couple of weeks, and going back to the middle of the summer, there's been all kinds of M&A activity surrounding some of the smaller names in the cannabis group. We're going to discuss a few of them today, primarily listed here in Canada. As we, continue to see some of the bigger names, moving to the downside, as Sean was saying, there just doesn't seem to be any sort of catalyst that comes across as positive for any of these names. So we're seeing continued consolidation in this sector. So, as a whole, give us your thoughts on, where this group is.
I think it's an interesting time in the sector. Like we've talked about, I think going over the last probably year or two, there were going to be a few that were going to rise to the top, and there were going to be a few that were going to come to the bottom. There's going to be a few in the middle. And much like any other business in its infant days, you're going to have that, right?
Yeah.
That bifurcation between the largers and the smalls, and where everyone would flush out. And the larger ones, like you've seen, like Cannabis and Tilray, are making acquisitions at first of a smaller nature and now have gone up in size into larger acquisitions. So that's something that we've continued to see. And the multi-state operators in the U.S. are really sort of a hot commodity for anyone that wants to be in the U.S. market, because states are starting to roll out at an increased level. There's more productivity, more production, and more purchasing happening in the states. So those ones that have the U.S. touch points are really going to see potentially an uplift in stock price as they announce sales and we go into further reporting seasons, and also be just in terms of your ability to be targets.
As we've seen and heard a little more federal level discussions as far as legalization in the U.S. is concerned,
for sure.
Focus has kind of shifted to south of the border. Let's get into a few names here, just to keep on the radar here, involved in most cases here in some sort of deal already. Gage is the first one listed here on the CSE in Toronto, the ticker GAGE. Tell us about that one.
So Gage is in Michigan, which is the third largest state for cannabis consumption in the U.S. The average basket that someone will buy in Michigan will be about $85. Gage's products are going out at 152. They've got $32 million in cash. And so it makes them an interesting acquisition target, which is what happened about a week, 10 days ago. A company called TerrAscend that we'll talk about next made an offer on them. And they are paying the equivalent of $266 a share. So $545 million market cap is what they're offering, with 0.3 TerrAscend shares for every share of Gage that you own. The interesting thing, the reason I thought we should talk about this one, is the offer was at $266. It's currently trading at $225 with a $310 million market cap versus the $545 that TerrAscend's offered.
Right.
So the deal does end up closing next year. So in theory, if you like what TerrAscend is doing, you may want to participate in getting that sort of small delta on the Gage share. So there's an opportunity there, or maybe another offer comes in. There is a $30 million termination fee on either side, so who knows?
And mostly cash, you said.
No, it's 0.3 TerrAscend share.
Oh, 0.3. Okay, so still, that's not huge as far as the split.
Yeah, so the TerrAscend we'll get into next. TerrAscend's trading at $833, right? So if you do the math, essentially at $250, you're getting a share of a valuation of TerrAscend at $225 on a Gage share.
Tell us about that side.
So TerrAscend, again, a much larger company, $1.5 billion market cap. Strong chairman as well, just like Gage does. They're in multiple states. Q2 sales of $59 million, up 72% year over year. $150 million in cash. They're going positive cash flow from operations. They're in multiple states. They've got dispensaries all over. They're making acquisitions. So this is going to be one of those sort of middle ones that's becoming a large, like we talked about, sort of in same thing with the booze space that you've seen. Right. So TerrAscend is one of those companies, a little bit more quiet, but I think that's one that's an interesting play as it starts to get more acquisitive.
Let's go to PLTH, and that one also on the CSE here.
So Planet 13, they're particularly strong, obviously, in a couple of states. They do have opportunities in Vegas, which is where they are larger. They just acquired a subsidiary of Harvest. Harvest was just acquired by TrueLive, I think it was in May, for a couple $1 billion. So they're picking up one of the subsidiaries there to get into the Florida market. They want to be in production and licensing and selling in Florida. And Florida does have 370 dispensaries. It is a hotspot for cannabis as the market continues to grow there. So they picked up an opportunity there off Harvest.
And then in the grow side of the business, there's JUSH.
Yeah, Jushi, again, in several states. They're in Nevada, Virginia, Pennsylvania, Ohio. Several states. They just acquired another grow in Ohio to add to what they've currently got. So they're really, pushing down hard on a couple of the states where they do have a larger presence, like in Virginia and Ohio.
So as we say, these are smaller companies in the cannabis space, but ones that are already starting to get snapped up, or either looking to combine with some sort of other entity to continue to grow. The last one, I mean, we've talked about this in the past, but CANN, is there a deal there?
You know what? When you look at Heritage, they have been acquisitive. They picked up a company called 315. They acquired Premium 5. They're a 66 million market cap. The stock has sort of traded in between sort of 8 and 10 and 11 cents the last while. So it's got a strong deal-making team if you're able to pick up these companies. The one that they just most recently are going to close on is going to be doing $2.5 million in sales. Currently, they just put out for July just over $3 million in sales. So if you give them a run rate of $36 million, in theory, they should be able to break even on that. And $36 million is less than 2 times sales of where they currently are. So either they have a little bit of cash. So either they go out and pick up more tuck-ins like they've been doing with the Premium 5s of the world, or maybe they're a target for somebody larger who says, listen, I need to pick up $35 million in revenue. Let me go pick it up for $66 million of cash or paper or whatever you want to do it at. So they could be someone that's on either side of that.
Makes a lot of sense. We've been talking about how this group has not really provided a lot of opportunities on the intraday time frame over the past little while. But if you look at it from this side of this perspective, there is opportunity looking at some of these smaller companies that could potentially be a target.
Yeah, no, then there are. I mean, the intraday trades are definitely smaller on these names because they do trade in the sub-million share a day sort of mark. They are a couple 100,000 shares a day, whatever number you want to call it. So there are those small intraday trades, but over a weekly basis or over a 2-week basis, depending on what your horizon is, there's definitely some opportunities on the trade there. And if you have longer term visions, then you look at the ones that are either acquisitive or targets. You do your math backwards and you figure out where you want to be.
Great stuff. As always, Rahim Allani, Managing Director of OCI Groups here in Toronto. Appreciate your time as always.
Anytime.